If you are having to borrow money to pay your income taxes, that's going to tell me one thing when it comes to working with you. That is that you do zero tax planning. Now, I experience this all the time in my career as an ag loan officer. We had customers coming in, and these were customers, again, they did the typical tax planning, which was essentially zero tax planning. They took in a box of receipts to their accountant on December 1st through the 15th, the most busy time of year for their accountants, and they expect them to give them a solid number back after trying to organize and make sense of all this mess that the customer just brought in. And they want them to give them a solid number back on exactly what they need to spend so they can avoid any type of tax bill. But sometimes the customers don't actually have enough time to go get the financing they need in order to make the prepaid or purchases in order to decrease that tax liability. So they come to the bank asking for a loan to cover their income taxes. Now, I'm not saying that this is a bad thing. I'm just saying it exposes some weaknesses inside of your operation. I can tell you with absolute certainty, if you did some level of tax planning and you had some structure and organization inside of your operation, you would never have to borrow money again to pay income taxes because you would already have a set plan in place. Your tax planning for the year would actually start in October, not December 15th. And there's a drastic difference between the business owner that starts in October versus December and the level of success they will have going forward in the future. I'm just telling you what I've seen time and time again working with hundreds of family farm operations across the country.